Hello traders, and welcome back to my YouTube channel once again. So in today's video, I am going to be revealing these three simple steps that will help you to trade smart money profitably. Okay, so if you are new to the smart money concept, you might want to stick around to the end of this video because I will be revealing these three simple steps that help me to even catch this huge trade that you see on the screen right here. Okay, so before we jump onto the chart, if you are not subscribed to this channel, kindly hit that subscribe button and turn on post notifications so that you don't miss other future important videos. All right, and also I want you to leave a comment in the comment section telling me what you want me to cover in future videos. Okay, so with that being said, let us jump straight onto the chart. All right, guys, so welcome back. So I do get a lot of DMs where people are asking me how I pick my trades or what I look for before I make entries. Okay, so I just feel like, you know what, there is nothing hidden on the internet. Okay, so why not? Let me just show you guys what I look at before I take these trades. Okay, so what I'm going to do is that I am going to show you a swing trade scenario, and I'm going to show you an intraday based scenario. Okay, so that depending on your personality, whether you're a swing trader or you are an intraday trader, you are just going to implement it and then take these good trades. Okay, but regardless of whether you're a swing trader or an intraday trader, it's just still the same steps. All right, so what you're seeing here is GBP USD. Okay, and the first step that you are going to look at is to identify major structure level and wait for that structure level to break. Okay, so if you're in a downtrend, okay, you just need to identify a major structural level like this, right? And so we have this high, this low, okay, and all what you're going to wait for is for price to break. So that's the first thing. Identify major structure level and wait for that structural level to break. Okay, great. So let us apply that here. So on GBP USD, what do we see? We see price making, putting a high over here, putting a low over here, right? And then we have this lower high that makes a lower low, right? And then another new lower high that makes a lower low over here. Okay, so what do we see? We see price putting all these lower highs and lower lows. Okay, so we've identified those major structure. Okay, so I'm going to be focusing on this leg over here. Okay, so we have identified that structure level. Okay, then we are going to wait for structural level to break, just like we have over here. Okay, so we've had that break of structure. All right, so break of structure, and that's the first step. All right, and the second step will be to mark demand and supply zones and wait for price to return to those demand and supply zones. Okay, so in this case, you are looking at a downtrend, and so we'll be considering supply zones. Okay, so we are going to mark that supply zone over here. Okay, and wait for price to come into that supply zone, just like we have had over here. Okay, so if you are wondering what you're going to do, like you're just going to wait for weeks until price gets into this place, I mean, that's not so. You're going to have other trading opportunities within this leg into the supply zone. So if you have not watched my video on higher time frame market structure, you should check it out, right, to give you an idea of the trades to look out for in this scenario until price gets into our supply zone. Okay, so let us continue. So first step, like I said, first step, we are going to identify major structure levels and wait for that BOS. Okay, and then the second step is we are going to mark demand and supply zones and wait for price to get into the supply zones. Okay, so we've had these two steps met. Okay, so we are going to step into lower time frames and apply the third step. Okay, now the third step is to repeat step 1 and step 2. That is the test step. So the test step repeats step 1 and 2. That is to say, you are going to look for major structural level breaks within those supply zones, and then you mark demand and supply zones within that higher time frame supply zone. So in this scenario, we are looking at within this supply zones on the weekly time frame. Okay, but before that, you can see that the daily is making what? Higher highs and higher lows. Okay, so let me just put that away. So because I'm taking my trade on the weekly time frame, my entry is going to be on the 15 minutes, or let's say 5 minutes. Okay, and I'll be targeting structural lows. Okay, if you have not watched my video on liquidity, you should check it out. I was explaining why it is important to be looking at these levels over here as targets, as minimum targets. Okay, so I'm going to step into my 15-minute time frame and repeat step 1 and step 2. Okay, and that is going to be my entry confirmation. Okay, so because I'm taking the trade from a weekly standpoint, it will be okay to take that 15-minute entry. Okay, so step 1 earlier was saying that we should identify major structure levels. So on this 15-minute, we see this structure level, prices making higher highs and higher lows. This is a complex pullback until that major structure level was taken out, right? So we can see step 1 again beautifully met over here. So we've had that break of structure to the downside. Okay, so mostly I call this a change of intent. Some people call it change of character, which is okay, right? Change of intent to the downside. Awesome. And then I'm going to repeat step 2 again. Step 2 says that we should mark our demand and supply zones, and because price broke to the downside, I'm going to be marking what? Supply zones within discounted levels, right? So I have my first supply zone over here. Okay, let me use the rectangle. So I have my first supply zone over here, which was not respected, right? If you have watched my video on the best Asian session trading strategies, you understand why this supply zone did not hold. Okay, and we have our second supply zone, and that is where price reacted off, right? So I'm just going to clean the first supply zone, and that is going to be my entry. Okay, I just don't want to go into details of why this supply zone failed, okay, because it's a smart money trap. It's a smart money trap right here. Okay, so if you want to understand why this first supply zone failed, you should check out my video on the best Asian session trading strategy. Okay, you'll find out why. So this is going to be our entry. Okay, 15 minutes is confirming the sales. Okay, and like I said, because we're taking the trade from a weekly standpoint, our target is going to be to at least that weekly target liquidity over there, right? So let me pull this back a little. Okay, let me pull that back a little and extend that, and I'm going to step back into the weekly time frame for the targets. Okay, so like I said, we are going to have this low over here as our minimum target. Okay, so I'm going to extend that from the top to the bottom. Okay, and that is it. That is our first swing trade. Okay, super clean. I mean, there's nothing to worry about. Okay, so that is it for the first scenario. I'm going to show you another entry or another trade on the daily time frame. Okay, the same chart on the daily time frame. So let me first take this one out and show you something on the daily time frame. So on the daily time frame, what do we see? We see price making higher highs and higher lows. Okay, so I've been able to identify my structural level, and I see that structural level taking out. Okay, so we've had that daily break of structure to the downside. Okay, daily break of structure to the downside right here, super clean, nicely. And again, step 2 was saying that we should look for our demand and supply zones and wait for price to get into those zones, right? So in this same scenario, we can see that price is also moving to the downside. So in this case, you can see the daily aligning with the weekly, right? Which is also fine. So I'm going to mark those supply zones over here like that, clean, and we can see that price respected the first supply zone. Okay, the supply zone below, price respected that one. Okay, so we've satisfied the requirement for step 2. Okay, so we mark our supply zones and we wait for price to come into it like it has done. So price has come into our supply zones, right? So I'm going to go into lower time frames and repeat step 1 and step 2 again. So I'll step into my 4-hour time frame and repeat step 1 and step 2 again. Okay, so in here we can see that the 4-hour was making what? Higher highs and higher lows, right? Until this 4-hour major structural level was taken out. Okay, so we can see the same thing. I'm repeating the same thing just on different time frames. So I've had the 4-hour structure taken out. Okay, so that's it for our break of structure to the downside. And because my entries are not on 4-hour, I am not going to how do you call it, I'm not going to have my entries as big as the zone. I'm not going to do that. I can't take stop losses like that. If I do that, you're going to see that my stop loss is going to be around over 100 pips. I mean that's crazy. So I'm just going to again repeat step 1 and step 2 after that break of structure. Okay, so I know that this is the leg that I'm going to look at, and so I'm just going to come in there. This was my whole supply zone, right? This was my whole supply zone. So I'm going to go down into lower time frames and repeat step 1 and 2. So in this case, I'm going to come into the 15-minute time frame and repeat step 1 and step 2. If I come in here and I'm okay with the entry, why not? I'm going to go for it. Okay, so in here on the 15-minute time frame, right, what do we see price doing? We see price making higher highs, right? My kids are making noise. See price making higher highs and higher lows, right? And then we had price break structure. So that major level on that 15-minute has been taken. Okay, and if I feel like the stop loss is okay for me to take that trade on 15-minute time frame, why not? I'm gonna take it. Okay, so that major structure level on the 15-minute has been taken. That's the first thing. Remember, we are in 4-hour supply zones, so that major structure level on the 15-minute has been taken. So this was the 15-minute breaker structure to the upside, and then that major structure level taken. And then what are we going to do? We are going to mark our demand and supply zones. Okay, so the first the first supply zone was in here, and the second one was in here, and that was where price reacted off, right? So let me take out the first supply zone. Jeez, these children. So that's where my entry is going to be. Okay, if I'm not satisfied with the stop loss, if I feel it's too big, I'm going to step down into smaller time frames and repeat the same thing. Okay, so in this case, we are going to have like, let's say 13 pip stop loss. I mean, it's okay. It's okay because I'm taking my trade from the daily time frame. Okay, so that's going to be my entry right there. Okay, and again, I'm going to extend it to the weekly target zones, because weekly and daily is aligning. H4 is also aligning, so we have all these 3 big time frames aligning, and then right now the 15-minute time frame is also aligning. Okay, so why not? I can take my targets to the downside. So if I come to the daily, time frame, and you feel like, okay, you're going to take your targets at just the daily lows, which is fine. That's 20R, okay, 20%, right? But then because I know that all these higher time frames are aligning, yeah, I can hold it to the downside, to the weekly targets. which is also okay. So you can see that that's 35R. The previous one was around 50R, right? And that was from the top here. Okay, so that is it with the swing scenarios. So let me show an intraday based scenario on a different pair. Let's say Euro USD. Okay. Oh wow, I have a lot of work going on here, so let me use a different broker. Euro USD. Euro USD. Great. So with the intraday, let me pick this example. So in here we can see price making higher highs and higher lows, right? So price is in an uptrend, right? Normally my intraday time frame is 15 minute. Okay, so I see price making that higher highs and higher lows. And what did the first step say? The first step says that you need to identify a major structure level and wait for that structure level to get broken. Okay, so in this scenario we have that 15-minute structure level breached. Okay, so we've had our first requirement. We wait for that structure level to break. We have that. And the second step was saying that we need to mark our demand and supply zones and wait for price to come back into those zones. Okay, so in this case we have our demand zone here, okay, nicely marked. So I'm going to change that, make it demand. Okay, and what do we see? We see price come into this level nicely. Okay, so after that, what am I going to do? I'm going to step into my lower time frames and repeat step 1 and step 2. That's the step that's the last step of the whole process. So in this scenario, I'm going to step into, let's say, my 5-minute. If I don't like what I see, I'm going to step into my 1-minute and repeat step 1 and step 2. Okay, so within the 5-minute time frame, you can see that, okay, price was what, making lower highs and lower lows, right? Okay, until we had this level breached. Okay, so we had that 5-minute structure level broken. Okay, repeating step 1 and step 2. So I identified the major structure level of the 5-minute, and then I saw it broken. Okay, so BA was to the upside. And what I'm going to do is that I am going to mark my demand zone. Okay, because I'm in the buy scenario, I'm going to mark my demand zone. And that is the second step, right? So I mark my demand zone. And then this time around, the mitigation of that demand zone is going to be my entry, right? But I'll show you something here. Okay, so in here, we can see that if you had your entry over here, and let's say your stop loss was very tight, you would have had your stop loss hit, and that's fine. I mean, it happened to me, right? It happened to me, so it's okay. But it doesn't mean that I should just close my chart and go because I have taken the loss. No. But what am I going to do after taking the loss? I'm going to go into lower time frames, like 1 minute, and see what price is doing over there. And if it's giving me something that I like, again, I'll repeat step 1 and step 2, because why not? I'm still within 15 minutes demand levels, okay, or demand zones. Okay, so coming into the 1 minute time frame, like I said, I'm going to identify again major structure levels, wait for that structure level to break as step 1, and then I'm going to mark demand and supply zone as step 2, and then within the step 3, I'm going to have my entry, because this is a 1 minute time frame. If it were to be higher time frames, I would have still gone down. Okay, so on the 1 minute, we see this spike. Okay, the market doesn't just move, it has a reason. It does everything for a reason. So in here, I can see my 1 minute structure nicely formed, right? Like I said, it was within 15-minute structure level, and so I am going to take this this tiny move that took me out on the 5-minute entry as liquidity. Okay, so that was a liquidity sweep nicely. I'm not supposed to bring these things over here, but just to get you to understand this entry. That's why I'm bringing this up. Okay, if you've not watched my video on the liquidity series, you can just go and check it out. Right, so like I said, I'm going to repeat the same thing. So I showed you that structure level on the 1 minute, right? This was my last, sorry, this was my last lower high that made that lower low. Okay, so what do I see? I see that level broken. Okay, and what am I going to do? I'm going to mark my demand zones. Okay, so I have my first one here and my second one down here. Okay, but you can see the price reacted off the first one. Okay, I know that some people would have taken this candle as your demand IFC order block or whatsoever. I mean, I don't care about that, but you should know that if you should take that candle as your order block, I mean your stop loss is going to be as this wide, right? But I understand that this is my entry, or this is my IFC, so I just going to take that as my IFC, and my entry is going to be on the mitigation of that block. So let's say my stop loss will be reasonably, let's say 5 pips. I'm just going to put it away from the bottom of this block. Okay, so that's going to be my first entry right there, and you can see price coming in. And what's going to be my target? My target is going to be on that 15-minute high. Okay, so right there, that's the 15-minute high over here, and you can see that trade just went, I mean, just took off. That's 12 hour, right? As simple as that. I mean, these things are not difficult, right? You see people drawing a whole lot of stuff to scare you. They are not difficult. Just take your time, learn these structure levels, and then try to incorporate this advanced concept like the liquidity stuff into it. I have done all those stuff already. You can just go watch them. Okay, so this is where I'm going to end today's video. If you found value in this video, kindly hit that like button, okay, and leave a comment in the comment section. Like I said from the beginning of this video, tell me what you want me to cover, right, in future videos. So you're gonna leave that in the in the comment section, right? So yeah, I'm going to end this video. If you're not subscribed to the channel, kindly hit the subscribe button and subscribe so that you don't miss other important video like this that is going to come up. Okay, so goodbye.